Hey guys, welcome back. I hope you had a really great day trading today. So today was Wednesday, August 28th, and we did have Nvidia earnings today, and it seems like everywhere you looked, that's the only thing that people were talking about. If you went on Twitter, they were talking about Nvidia earnings. Turn on the news, Nvidia earnings. I had people call me and say, what's going on with Nvidia earnings? So Nvidia was front and center today, and SPY did open flat, and we lost this 35 EMA right away. And then from there, we dropped down to the bottom of the implied move. You could see we filled that Jackson hole gap from last Thursday going into Friday with that drop. And as soon as we filled it, we did swing back up to close within the implied move. And you can see we got pushed back a little bit by that 35 EMA. And remember in yesterday's video, I mentioned that the bottom of the implied move in SPY was bigger than the one in SPX. And this is why that was important. So today we did open with that same flat open, but then we dropped underneath the 35 EMA. We dropped underneath the bottom of the implied move, which was right here at 5,600. And then from there we came down, filled this gap, and then we popped back up, and we actually closed outside of the implied move. So that is why last night I was looking at this and saying, I don't think I trust the SPX implied move. And I did trade SPX today, but I got into spreads when SPY, when we were at the bottom of the implied move here. This implied move was twice as wide, and honestly, I have no explanation for why SPX was so much smaller, but I did use SPY, and I did end up selling, I believe it was 55.85 and 55.75 spreads, so right at the top of this gap. And then from there, we did swing back up. We took it all the way back to the 35 EMA, and that pushed us out. But you can see we did close outside of the implied move. So SPY closed down 0.58%. SPX closed down 0.6%. VIX closed up 10.87%. And SPY closed within the implied move. SPX did not. So taking it over to QQQ, and don't worry, I am going to do Nvidia. QQQ did open down. We dropped right away, got underneath the 50-day moving average. We got underneath this support level at 474. I've been talking about this level a lot. I'm sure I'll zoom out to it in the second half of the video, but we dropped underneath these two levels. We took it all the way down to the bottom of the implied move, which was right here at 470. You can see at first we did try to bounce right there, but then we lost it. We dropped a little bit further, and we did take it all the way down to the 30-minute 200 moving average. The top of this gap right here from consumer spending 2 weeks ago was right here. That 30-minute 200 moving average was also there, and we bounced on those two levels to swing back up, and we did close within the implied move. So if you sold 470, 469 spreads here, those would have paid 100%. Also, if you sold 468, 467 spreads, those would have also paid 100%, as we did bounce right back into the implied move. So QQQ did close down 1.13%. VXN closed up 7.99%. So clearly it looks like the market's expecting higher volatility tomorrow, and we did close within the implied move today in QQQ. And then in IWM, we did open with a small gap down, and first support was right here. We bounced, we closed that morning gap. 35 EMA was right there. It dropped us all the way down to the bottom of the implied move, which was at 216. And right at that level, we bounced back up, and we took it back to the 35 EMA and closed just a little bit underneath that 35 EMA. But we did close within the implied move. So IWM down 0.68%, RVX up 3.32%, and we did trade completely within the implied move here. And DIA did open slightly up, and we hit that first resistance level right here, which was our resistance from Monday. That was at just under 414. From there, we got hit back down underneath the 35 EMA, and we took it all the way to the bottom of the implied move right here. So 408, you could see almost to the penny. We had just a tiny bit more to go before we turned back up, and we took it all the way back up to the 35 EMA. I wish this didn't do that. Those little panels right here, when I hover over it, makes it really hard to show what I'm doing. But so here we also did stay within the implied move. We bounced on that Jackson Hole gap that was from last Thursday going into Friday. So up gap and bottom of the implied move. It always helps when there's two levels somewhere because that does tend to pop us back up, and today it did. DIA had the smallest down move today, down 0.38%, and we did trade completely within the implied move. And since I mentioned Dow Jones had the smallest move, the NASDAQ had the biggest move. And of course, with Nvidia earnings, and let's actually switch over to that, because of Nvidia earnings, we did see some more downside in after hours. But this was the implied move that I set up for you guys twice. I did it in last night's video, and then today during market hours, I also set it up. And let's get to the 1 hour time frame here. And the implied move here was between 113 and 143. And if we take it over to extended trading hours, we can see that we did make almost that entire implied move. And actually, the actual bottom of the implied move, I don't know why I put 113. It's actually 114.13. And we closed just a little bit above that, 116.95. So a few dollars up. At the low in after hours, we did get pretty darn close to that 114. And this is why it pays to know how to read and set up the implied move. All right, super fun day. Let me know how it turned out for you guys, and let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. Leave me a comment below if you have any questions at all. I do try and get back to all comments within 24 hours, and if something I said doesn't make sense, just leave me a comment. I'll try and clarify or explain it in another way. And if you took an amazing trade based on something you learned here on my channel, and you want to give back, then don't be afraid of that thank you button. It helps my channel grow, it keeps the content coming, and I really appreciate it. Alright, so starting in SPY, tomorrow's implied move is between 551 and 565, and that is from options, and we could see that that range definitely expanded. We did have VIX up 10% today, and you can see just how much bigger that did make our trading range for tomorrow. And then the 30-day average volatility is between 547 and 569. And the implied move on Friday's contract is between 550 and 566. Don't forget that we do have PCE on Friday, which is the Fed's preferred measure of inflation. So that is another reason why we're seeing these expanded trading ranges into the end of the week. Also, another thing to not forget is that we do have a 3-day weekend. So if you are looking into next week, just know we have an extra day of theta burn because markets are closed on Monday. And then to the upside, the very first level to look for is going to be the 35 EMA. So today we did not trade above that level at all. We were completely under it. And the 35 EMA is a super important level in every day's trading range, and you could see earlier this week, ever since Jackson Hole, we gapped up and we stayed really close to that level. When we were rallying earlier in the month, you could see that level was our support. So 35 EMA, we need to see at open if that is resistance, and if it's not, if we can get above that level, then the next target is going to be this down gap right here. This is the down gap off of all-time highs, And we did make all-time highs back here on July 17th. It was actually on the 16th, and then on the 17th we gapped down, and we've been chipping into this gap for the past 2 weeks, and we got pushed down pretty hard from it right here on Monday. But if we get above that 35 EMA, then definitely look up to that remaining piece of down gap. All-time highs are just above the top of the implied move at 565. So the top of the implied move is 565. All-time highs 565.16. And then the implied move on Friday's contract 566. And then if we do see that 35 EMA as resistance, if we do come up, get rejected at this level, then the next level to look for to the downside is going to be right here. We did see support there last Thursday, right before Jackson Hole. That is where we bounced today, and that is at 555. And then the bottom of the implied move for tomorrow is 551. The 30-minute 200 moving average projected out takes us right to 551. So definitely a possible level of support there. Underneath that, 550 is the bottom of the implied move on Friday's contract, and we do have the 50-day moving average underneath the next 2 days implied moves. And we did gap over the 50-day moving average right here with that consumer spending gap. And you can see that 50-day moving average is right on top of that gap. So if we do drop, these levels right here have a huge probability of being support on the day. And just to throw one more level in, the 1 hour 200 moving average is within the gap, and it is still pointing down. It's actually more flat at this point, but that momentum is what has been stalling us until we can get that turned back around. So 1 hour 200 moving average definitely should be on your chart, but it's not in tomorrow's trading range. It's just outside of it. And then switching over to SPX, the implied move over here for tomorrow is between 55.45 and 56.40. That is from options. 30-day average volatility is about twice as wide, 54.85 to 5,700, and then on Friday's contract 55.30 to 56.50. To the upside, the 35 EMA. This is the first day since that big drop that we spent the entire day underneath the 35 EMA. Right here we got underneath it, but this is from last week. We actually opened with that gap up and filled the bull gap here, and once we filled that, we got smacked back down, but this was the second half of the day. But today we actually opened underneath the 35 EMA, and we stayed underneath that level for the entire day. So that is a very important level to look to and see how we react first thing tomorrow. If we get above that, then the next level to look to is going to be 56.40. That is the top of the implied move. We did see a little bit of resistance right here, but I don't think that that is in addition to 56.40. It's just underneath it, but I wouldn't call that a big resistance level here. The main resistance to the upside is going to be this gap right here, and that's 56.50. That's actually the top of the implied move on Friday. It's also the bottom of that down gap. So just above that, we do have all-time highs, and it is within the trading range for tomorrow. All-time highs are at 56.69.67. And then to the downside, if this 35 EMA is resistance, then the next level down is going to be right here. We did see that as support on Thursday and today. That's last Thursday, right before Jackson Hole, and that is 55.60. And then if we lose that, the bottom of the implied move, 55.45, that also has the 30-minute 200 moving average right there. When we have two levels to catch us, it's a much stronger bounce. And the bottom of the implied move is a level, so that would be the first level, and then the second one, that 30-minute 200 moving average. So if we drop, definitely look there. Underneath that, we have 55.30 as the bottom of the implied move on Friday's contract. 50-day moving average, again, we gapped over that 50-day moving average right here with the consumer spending gap. I have consumer credit, but I think that was consumer spending. So that's another one that does have two levels, 50-day moving average plus the top of that gap. And then underneath all of that, we do have that big gap from consumer spending plus the 1 hour 200 moving average. The momentum is still down there. And truly, as long as this moving average is sideways or down, we're going to get a slight pull downwards. And then taking it over to QQQ, the implied move for tomorrow is between 462 and 481, and you can see just how wide that gap is, and that is because Nvidia has such a heavy weight in QQQ. And then the 30-day average volatility, $3 wider in each direction, 459 to 484, and then the implied move on Friday's contract is 460 to 483. So we definitely got a big expansion here in the trading range. If you like volatility, QQQ might be the place to be tomorrow. And to the upside, the first level to look for, and this is 3 levels. This is going to be 474, the 50-day moving average, and the 35 EMA on the 30-minute time frame. So let's start with 474, and I'm going to zoom out to the 1 hour time frame to show this. And 474 right here, let me just fix this up. 474 was support right here and right here. Then when we gapped underneath it, it flipped to resistance. So now we are finding ourselves back at this level. We did get above it, and then we hit the resistance right here that actually was right before that down gap, and then we got pushed back underneath. So 474, we've seen it many times over the past few months, and it's definitely an important level to the upside. And just while we're on that 1 hour time frame, take a look at how this 1 hour 200 moving average is still pointing down. I've been mentioning over the past week, maybe even 2 weeks, how a downward facing moving average is gonna pull the price down, and it's really cool when you see how that happens. Once we tap it, it's definitely possible that we turn it upwards, but keep an eye on that momentum. And then, okay, let's go back to the 30-minute time frame here. So 474 is the first level to look for. 50-day moving average is right above that. The momentum there is completely flat, and you can see the two levels together did catch us last Friday and then this week right here. And now we are underneath it. So look to see if that is resistance. We also have the 35 EMA on the 30-minute time frame, and you could see that that has been a resistance right here. It was a very clear support for about 10 trading days right here, but now that we're underneath it, it's acting more like a resistance, and it's right there with those other two levels, and that could definitely smack us pretty hard or turn back into support. So if we do get above that, then the top of the implied move for tomorrow is 481. The top of the implied move on Friday's contract is 483. And let me fix this just a little bit. I'm too far out. And then we do have the next resistance level right at the top of the trading range at 484. And that is where we got hit last Thursday. And that was right before Jackson Hole, and you could see that's where we saw that 50-day moving average and 474, and then Jackson Hole bounced us back up, but we didn't get back up to that 474 resistance. And then above that, just because I'm seeing this red, it's not within tomorrow's trading range, but our next bear gap, just so you're aware of it, is right here at 488 to 495. It's a really big gap, and that is the gap that we had just off of all-time highs. So the upside is definitely pretty messy, and then to the downside, we are at the 30-minute 200 moving average and that consumer spending gap right here. Those two levels did catch us, and we bounced back up. So that should definitely be on your chart and the first level to look for to the downside. And then of course that downward facing 1 hour 200 moving average. The bottom of that consumer spending gap is right at the bottom of the implied move at 462. And then we have an upward facing 4 hour 200 moving average. So if we do drop down to this downward facing moving average right here, just know that we have an upward facing one not too far away. And it does actually line up right with the bottom of the implied move on Friday. And then underneath that, we do have the island bottom gap. And this is the up gap from after we bounced off of that big drop. The 200-day moving average was there, the 35 EMA on the weekly time frame, and we have this gap right here. And I don't know what the up gap is. I think this is just where we started the gamma squeeze, but the down gap is from Amazon earnings and where we saw lower guidance into the next quarter. So huge battle zone just underneath the next 2 days trading ranges. So QQQ is no joke. This is an intense trading range, a lot to know about, and such a different trading range compared to what we saw earlier in the year, where we were just so bullish and all the moving averages were in the right order, the smaller time frames trading above the larger time frames, and there was no resistance. That is not what we're looking at here. We are looking at an absolutely wild trading range. So that is QQQ. I'm going to post this chart on TradingView tonight because I think this one needs to be remembered. I don't see trading ranges this crazy every day. So that is QQQ. Taking it over to IWM. The implied move over here is between 214 and 220, and 30-day average volatility is quite a bit wider, 210 to 224. Friday's contract is between 213 and 221. To the upside, the first level to look for is going to be the 35 EMA, and today we did trade completely underneath that level. We did open down, and then when we did pop back up to close the gap, 35 EMA was right there to smack us down. And then when we hit the bottom of the implied move right here, we came back up. We got rejected at this level. So 35 EMA directly above us. And then if we do get above that, we have a bear gap. This is from the start of the week. And let me actually rephrase that, because this was the start of the week. This was Monday. We gapped up. And then Tuesday we gapped down, and you can see we gapped down underneath that 35 EMA. Ever since then, it was resistance. But if we get above it, this is going to be the next level to look for. Top of that gap lines up with the top of the implied move at 220. 221 is the top of the implied move on Friday's contract, and above that we do have Monday's highs, where we did get rejected. And then to the downside, we do have the Jackson Hole gap. The 1 hour 200 moving average is also facing down here. I have been mentioning that a downward facing moving average is gonna pull us in, and it's pulling us in. 214 is the bottom of the implied move on tomorrow's contract. 30-minute 200 moving average is right there underneath, and 213 is the bottom of the implied move on Friday's contract. So it's a little bit hard to see, but the bottom of the implied move for tomorrow is right here, literally right in the middle of the gap. And then right here is Friday's. And then 50-day moving average, it got above this gap right here. And then at the very bottom of the trading range for tomorrow, I have it at 210, but this dashed line right here is that really long support and resistance. I'm going to take it to the 1 week. This is the 5-year 1 week chart. And 211 right here was support in all of 2021. Then 2022, we gapped underneath that. We didn't gap underneath it, but we dropped underneath it. And when we came back up, it was resistance. Then this March, it was resistance. And then we've recently been chopping around that level. So 211, and that is underneath our trading range for the next 2 days right here. And then we have the next battle zone right here. And that is where we had that little bit of down gap open right here that we didn't fill, and then we gapped over it. Bottom of that gap is at 206, and that 4-hour 200 moving average underneath all of that. So it does feel like there's a decent amount of support underneath us. Definitely an interesting trading range. I think that if we get down to the 30-minute 200 moving average, and definitely the 50-day moving average, that we might get popped right back in to the implied move. So that is IWM and DIA. The implied move here actually expanded since yesterday, and it's between 406 and 417, and that is from options. The implied move for the week is between 406 and 418, so they almost line up completely. You could see so far that from where we closed last week to where we are right now, we really haven't gone anywhere. We've been trading sideways. And to the upside, the first level to look for is the 35 EMA. We did see that here as well as a support after that big drop. So right here, we got back above it. And for the most part, with the exception of right here, we did see that as a pretty solid support. So we dropped under it right before Jackson Hole. Saw another pop up to the next resistance levels, which were earlier in the year right here. Right there, we saw one in July, and this is July as well. But we were trading right here in between those two levels, and then we got pushed back down. So 35 EMA is the first level to look for, and then that first resistance was at 412, second resistance at 414, a little bit underneath it. But if we do get above that, the top of the implied move is at 417. And then underneath us, we do have the Jackson Hole gap. We did bounce on the day. Today, we also did have the bottom of the implied move right there. So that could have prevented us from actually getting into this gap. The bottom of that gap is at 407.5. Bottom of the implied move for tomorrow is 406. And we do have the 1 hour 200 moving average. This is the only chart where the 1 hour 200 moving average is pointing up. So really wild trading ranges for tomorrow. Hopefully after watching this video, you're ready to tackle anything that happens tomorrow. Honestly, the hardest part of trading is being prepared to react to whatever happens. So if we pop up, what are you gonna do? And if we drop, what are you gonna do? To have that game plan in advance. So have fun tomorrow, trade safe, make sure you take profits when you're up, and I'll see you guys tomorrow night.